Well, with the European debt crisis, the American government shutdown and an Australian election, it's been a very busy year in the world of business and finance. And of course, that means it has also been a busy year for our own business journalist, Ricardo.
That's the way I like it too, Kathy. A slowdown in Australia's economy in 2013 hasn't stemmed the growth in various investment assets for many Australians. The share market made a late end-of-year rally, superannuation funds returned double-digit figures and property prices surged. But what's in store for 2014? 2013 was a year of recovery as Europe slowly managed its way through its economic crisis, culminating with the US easing economic stimulus, much of which were reflected in global share markets.
The US stock market's up a massive 25% and the Japanese stock market's done even better than that, with a rise of almost 50%.
That's contributed to another double-digit performance for the median Australian superannuation growth fund so far this year.
So with those sorts of fantastic returns, it's no wonder the average fund does well, because it probably has 50 to 60% of the portfolio in shares.
But we're being warned to pare back expectations for the next 12 months.
Typically what we say, for the average fund, year in, year out, if it's earning 7%, you're doing really well, because that means you're earning about 4% above inflation, which is a really good return.
Australian shares also had a good year, up by more than 10%, with companies exposed to the US benefiting from the Australian dollar's 14% fall against the greenback, a trend which may continue next year.
The number one theme is going to be the continued strength in the US currency, and that's going to have a positive impact on Australian stock earnings.
It's been a good year for property, with the average house price across the country rising by more than 8% as upgraders and investors moved in on the market. Rental yields for houses were best in the Palmerston suburb of Johnston in Darwin at 14.7%. For apartments, the inner Sydney suburb of Ultimo topped the list. Of the capitals, Sydney house prices were strongest, up 13.7%, and Sydney was also home to the biggest change in median home values across the country, Kirribilli for houses and Enmore for apartments. While similar house price gains aren't expected next year, the sector could play a part in an economy which is coming off the mining boom.
The fact that population continues to rise, we're not building enough units and apartments yet to house all our growing population. We've got super low interest rates and we've got state government grants for new construction. That all suggests that we're going to see stronger growth in the housing sector over 2014. And it will be the baton pass. We're going to see the baton passing from the mining sector to the housing sector.
But that may ultimately mean higher interest rates toward the end of the year when the economy recovers. Well, bad for mortgage holders, it's good news for interest-only investors like depositors who've been living on low rates for the last few years. And of Australia's 200 biggest stocks, law firm Slater & Gordon did the best this year thanks to some high-profile legal cases, the resurgence in the property market propelled realestate.com.au owner REA Group, and a recovering retail sector aided JB Hi-Fi. And the biggest losers this year were smaller miners and gold producers. They slumped as the gold price tumbled 30% as the US Federal Reserve started to wind back economic stimulus.